The IRS just changed a filing rule that could delay your refund or trigger an audit if you miss it. Thousands of retirees are already filing their taxes without knowing this update even exists. In the next few minutes, you'll learn exactly what changed, who it affects, and what you need to do before you file. Stay with me until the end, because I'll show you the one small detail most people overlook that could save you from a very stressful call from the IRS. If you want to stay protected and informed about changes that actually affect your money and your peace of mind, go ahead and subscribe right now. I break down every important update in simple terms so you never feel confused or left behind. Hit that bell icon too so you never miss a video that could save you time, money, or a big headache. Let me start by saying this. You are not behind. You are not in trouble. You're here right now. And that puts you ahead of most people. The IRS makes changes every year, and most of them don't get explained in a way that makes sense to everyday people. That's exactly why I'm here. I'm going to walk you through this step by step, and by the end, you'll know exactly what to do. So what actually changed? The IRS updated the income reporting threshold for third-party payment platforms. If you've ever used apps like Venmo, PayPal, Cash App, or Zelle to receive money, this could affect you. In previous years, these platforms only had to report your income to the IRS if you received more than $20,000 and had over 200 transactions. That was a pretty high bar, so most people never hit it. But the new rule drops that threshold dramatically. Now, if you receive $600 or more in payments for goods or services through these platforms, the company is required to send you a 1099-K form and report that income to the IRS. This is a huge change. It means a lot more people will be getting tax forms they've never received before. And here's the tricky part. Just because you get a 1099-K doesn't automatically mean you owe taxes on that money. But it does mean the IRS knows about it, and they expect you to report it correctly. If you don't, it could look like you're hiding income, even if you're not. Let me give you a real-life example. Imagine you're a grandmother who sells handmade quilts at craft fairs and also through a small online shop. You use PayPal to collect payments. Over the course of the year, you bring in about $800. In the past, PayPal wouldn't report that to the IRS because you didn't hit the $20,000 mark. But under the new rule, because you crossed $600, PayPal will send you a 1099-K in January. Now, that $800 is on the IRS radar. If you don't include it on your tax return, the IRS computer system will flag it as missing income. You could get a letter asking why you didn't report it, and that could lead to penalties or interest charges, even though you didn't mean to do anything wrong. Here's another example. Let's say your daughter pays you back for groceries and bills using Venmo. Over the year, she sends you about $700. That's not income. That's just reimbursement. But if those payments were marked as goods or services, Venmo might still issue you a 1099-K. Now you have a tax form for money that isn't taxable. If you don't handle this correctly on your return, it could cause confusion or delays. Are you starting to see how this could affect you or someone you know? Drop a comment and let me know if you've used any of these payment apps in the past year. Now let me bust a common myth. Some people think that if they just ignore the 1099-K, the IRS won't notice. That's not true. The IRS gets a copy of every 1099-K that gets sent out. Their computer systems automatically match those forms against your tax return. If the income on the form doesn't show up on your return, the system flags it. You might not hear anything right away, but months later, you could get a letter saying you owe taxes, penalties, and interest. By then, it's much harder to fix. The truth is this: if you get a 1099-K, you need to address it on your tax return, even if the money isn't taxable. You just have to explain it correctly. Let me walk you through the most common mistakes people are making right now. Mistake number one is assuming that all money on a 1099-K is taxable income. It's not. If you received reimbursements, gifts, or personal transfers, those are not income. But you still need to report the form and then subtract the non-taxable amounts. Mistake number two is throwing away the 1099-K because you think it's a mistake. Even if you believe the form is wrong, you can't ignore it. You have to deal with it on your return or contact the platform to get it corrected. Mistake number three is not keeping records. If you're going to claim that some of the money wasn't income, you need proof. Keep your receipts, your notes, and your transaction history. Mistake number 4 is waiting until the last minute to figure this out. If you wait until April to open your mail and discover a 1099-K you weren't expecting, you'll be rushing, and you're more likely to make an error. Mistake number 5 is filing your return before you receive all your 1099 forms. These forms can arrive anytime from mid-January through early February. If you file too early and then another form shows up, you'll have to file an amended return, and that's a hassle you don't need. Now let's talk about who this really affects. If this is you, pay close attention. You run a small side business, even a tiny one. Maybe you sell baked goods, crafts, tutoring services, or you do freelance work. If you use a payment app to collect money from customers, you're probably going to get a 1099-K this year. You need to make sure every dollar on that form is accounted for on your tax return. If some of it was personal or reimbursement, document it clearly. If this is you, listen up. You're retired, but you occasionally sell things online. Maybe you sold some old furniture, collectibles, or clothes through an app or website that uses PayPal or another platform. If your total sales crossed $600, you'll get a 1099-K. But here's the thing. Selling your used personal items usually isn't taxable income because you're selling them for less than what you paid. You just need to show that on your return so the IRS doesn't think you're running an unreported business. If this is you, take note. You share expenses with family or friends and use payment apps to settle up. Rent, groceries, utilities, trips. If someone sends you money and marks it as a payment for goods or services by mistake, you could get a 1099-K even though it's not income. You'll need to explain that on your return and keep records of what the payments were really for. Now here's the part most people miss, and this is something I want you to remember. The IRS doesn't care what the payment app calls it. They care what it actually is. Just because you got a 1099-K doesn't mean the IRS automatically believes it's taxable income. But it does mean you have to tell your story correctly on your tax return. If you don't, the IRS computer will assume the worst. That's the one small detail that trips people up every single year. Let me tell you exactly what to do today. First, check your mailbox and your email for any 1099-K forms. These should arrive by the end of January, but some companies send them in early February. Don't ignore them. Open them right away. Second, compare the total on the form to your own records. Go through your payment app transaction history and add up what you actually received. If the numbers don't match, contact the payment platform immediately to ask for a correction. Third, separate your income into categories. Personal reimbursements go in one pile, gifts go in another, actual business income goes in a third. You'll need this breakdown when you file. Fourth, gather your proof. Print out or save screenshots of transactions that show what the payments were for. If someone paid you back for concert tickets, save the receipt and the Venmo note. Fifth, talk to your tax preparer now, not in April. If you usually do your taxes yourself, consider getting help this year if you received a 1099-K for the first time. It's worth the peace of mind. Let me also give you a word of warning about scams. Anytime there's a new tax rule, scammers come out of the woodwork. You might get emails or phone calls claiming to be from the IRS or from payment apps asking you to verify your income or update your information. Do not click any links. Do not give out your social security number, bank account, or any codes. The IRS will never call you out of the blue and demand immediate payment. They will never ask for payment in gift cards, wire transfers, or cryptocurrency. If you get a call that sounds urgent or threatening, hang up. If you're worried it might be real, look up the official phone number yourself and call back. Do not use the number the caller gave you. The same goes for emails. If you get an email that says it's from PayPal, Venmo, or the IRS, do not click anything. Go directly to the official website by typing it into your browser yourself. Here's something else to keep in mind. If you're helping an elderly parent or relative with their taxes this year, ask them if they use any payment apps. A lot of seniors have started using Venmo or PayPal because their kids or grandkids set it up for them. They might not even realize they've been receiving payments that could trigger a 1099-K. Sit down with them and go through their transaction history together. Make sure they're not about to file their taxes without reporting something the IRS already knows about. Does this feel more clear now, or are you still wondering how it applies to your specific situation? Let me know in the comments what questions you still have. Now let me tie this all together. The new IRS rule isn't designed to punish you. It's designed to close a gap where some people were running businesses through payment apps and not reporting that income at all. But the side effect is that a lot of innocent retirees and casual sellers are now getting tax forms they don't understand. The key is to not panic. If you get a 1099-K, take a breath. Look at what it says. Compare it to your records. If it's accurate and it's real income, report it. If it's not income, document why and explain it on your return. If you're not sure, ask for help. There's no shame in that. The worst thing you can do is ignore it. Let me give you one more example with simple numbers so you can see how this works. Let's say you received a 1099-K for $1,000. You look at your records and realize that $500 of that was from selling old furniture on Facebook Marketplace. You sold a couch for $200 that you originally paid $400 for, and a table for $300 that you originally paid $500 for. That's not taxable because you sold them for less than you paid. The other $500 was your daughter paying you back for half the cost of a family vacation. That's not income either. On your tax return, you report the $1,000 from the 1099-K, and then you subtract the full $1,000 with a note explaining that it was personal sales at a loss and reimbursements. Your taxable income from that form is zero, but you still reported it, so the IRS computer is satisfied. No flags, no letters, no problems. Here's what I want you to take away from this. You are not powerless. You are not at the mercy of the IRS. You just need to know the rules and follow them. This new reporting threshold is going to affect millions of people this year, and most of them have no idea it's coming. But you do. You're already ahead. Now you just need to take action. If you haven't already, go through your email and mail right now. Look for anything that says 1099-K. If you find one, don't put it in a pile to deal with later. Deal with it today. If you don't find one, that's great, but keep checking through the end of February, just in case. Set a reminder on your phone if you need to. If you're working with a tax preparer, send them a message today and ask if they're aware of the new reporting rule. Make sure they know to look for payment app income on your return. If you do your own taxes, add an extra hour to your process this year to review your payment app transactions carefully. It's worth it. And here's my final piece of advice. If you ever feel confused or overwhelmed by something like this, you are not alone. These rules are complicated, and they change all the time. That's not your fault, but it is your responsibility to stay informed and protect yourself. That's why I make these videos. That's why you're here. Keep learning. Keep asking questions. Keep taking small steps to stay in control of your money and your peace of mind. The IRS is watching more income than ever before, but that doesn't mean you have anything to fear if you're honest and thorough. You've worked hard your whole life. You've earned your retirement. Don't let a simple tax form steal your peace or your refund. Take charge. Get organized. File correctly. And if you need help, ask for it. You've got this. Now let me ask you one last time. Are you going to check for that 1099-K today? Or are you going to wait and hope it doesn't matter? The choice is yours, but I know you're going to make the right one.